Hi, welcome to the Market Alert for Tuesday, the 7th of July 2020. So yesterday, stocks surged globally after biggest daily rise since 2015 in China. We saw most of this put on in the pre-market session, which we looked at in yesterday morning's Market Alert. But yesterday, the Nasdaq is what this is referring to, big tech wreck shorts in another melt-up in bonds. It says here, just keep buying, keep the lunacy going. That's the trick. So let's have a look and start off with the German DAX. We'll start off with the daily chart. I always like to look at the bigger picture, and we can see we've got the all-time high at the top here at 13,827. We've got the fib retracements from the major swing, and then we've got the recent high from here that we saw a couple of weeks ago, and then we've got the swing from this high to this low projected back, which we can see there at 89%, which is where the market's currently stopped. I'm showing you this because I want to then move in and have a closer look at what's actually going on, so that we get more of an idea of where we are in the bigger picture there. So you can see that yesterday the market stopped at the 89%. We can also see that it closed below it, and there is weakness overnight as well. So what I would be doing here, before I even consider any sort of trade, is looking at this low to this high and just drawing in a fib retracement there, just to give me some idea of where the market could come back to. Ties in with the 20 bar moving average and the 200 MA as well, for a 62 and a 78% return there. Also, keep an eye on the 5 bar moving average. It's a very useful moving average because it shows the momentum of the market. I'm not for 1 minute saying that the market's going to come back, but if it does, this is going to be its first area of support in the daily chart. So always keep an eye on this. And it also coincides with the low of the previous day yesterday as well, or will do in that sort of area, ballpark. So if I go to the 2 minute chart, I'm just going to get rid of this, and I'll come back to this in just a second. I just want to show you how I would use this. We go to the current state of play, the overnight, which you can see the market's down a bit, and then what I'm going to do is just to do this. I'm just going to compress everything up, and the low of yesterday I can see ties in with the daily chart 5 bar moving average there, or more or less. So I know that if I'm short on this market and I get down to this level, then I know it's going to tie in with the 5 bar moving average in the daily chart. And it's just useful to have these areas already predetermined in your mind and sitting there in the event that something does happen and the market trades down to this level. If I can find out where we are in the charts, that would be useful. So here we go. This is yesterday morning. The market moved lower to start with. Now, interestingly enough, as I mentioned yesterday, I'm busy wading through the videos on the coloured volume bars, what they mean, why they appear at certain areas. And yesterday on this short, when the market went short, it traded down to the 200 bar moving average. This is a crucial area. Again, I'm going to do a video on this as well, why it's really important to have the 200 bar moving average. But we can see that in the volume there, the market, we see profit taking from the short side, and why it never breached the scalp, because we're at the 200 bar moving average. We've got the psychological level there, and we see the buying coming into the market as well. So again, that's a reason why you would say, well, I need to abandon ship at this point. We then see the market put in a potential buy signal, because if it isn't going down, it's going to either go sideways or higher. And with the momentum from China the night before, this moves prices to the upside. A very interesting price bar here, both from a volume point of view and also from where it actually closed as well. Prices came off the high So 50 odd points up at this point, came off the high, and you see this volume. Now common sense and logic dictate here, if the market is closing more than halfway down the price bar and the volume is high, it extends above the moving average, it doesn't need to be coloured. You can see there that we've got a very high volume, then there is profit taking in the market. There has to be, and otherwise the market would have closed on the high and it would have been more buying coming into the market. To add to this, we've got potential weakness following, which is again further profit taking, and then the market trades sideways, trades down to the 20 bar moving average, and then attempts to come back. However, once we close below the 5 bar moving average, the 20 bar moving average, and the BRN, you'll notice that we have a change in trend. Also notice how the 20 bar moving average now becomes a ceiling for the market along with the BRN. So even though we don't have a signal that it's generated automatically, you can see that we've got the weakness in the red price bars, and also prices closing below that BRN and the 5 bar moving average as well. Notice this bar here, fascinating bar, because the market again sees profit taking, and if you look across to the left you'll see we're in a similar area. However, if I do this, and again I'm going to record videos on this, so don't worry too much at the moment. If I go from this low to this high and it projects across, you'll see that this where the buying comes in is 89% of the way back from this low projected to this high, and that's where the buying comes in. So this creates support, and you will also see prices trade sideways through a 200 bar moving average as well. Now if you're actually short on this market, all you've got to do is to think in this way. You just have to feedback the information to yourself, and I will look at it myself and go, well, it's not closing back above the 20 bar moving average because the price bars remain red. I've also got the I think this was the R3, no, it's the R2 pivot as well. Is the market's finding support at this. They want to keep the market on this level. But if the price bars aren't turning green and there's no other green bars coming in after this green bar, then it's likely that we are going to continue short. So even though prices have closed above the 5 bar moving average, they start to close back. That's your cue for we could see weakness, because again, use the 5 bar moving average as momentum, and then we see prices move lower, we get a bit of selling, and we see the short taking the profits on the down move there as well, because you've got the green buying. As the market moves lower, you will see the profit taking in green, and then there's no follow through in buying to the upside. And look, once again we get a close back below the 5 bar moving average. We see the selling re-enter until we get the profit taking once more. So there is definitely a cycle to the markets and how these bars work, and well worth understanding, because it will give you a serious edge, because you can then either get into the trade earlier, you can get squeeze more out of the trade as well. And in the afternoon, the market opened, we saw the selling. There was a bit of a battle going on to begin with, and then here we go again. We see the market go short, and then we see them buy it back, and then prices above the 200 bar moving average. We get a close back here, but there's no selling, and then the market trades higher, and straight up to the R2, which was support earlier. Once it broke through, though, it's now become resistance from the morning session, and we see this massive volume here in this green bar with the red inside of it. Also notice what happens here. We get a close below the 200 bar moving average as well. So the 200 bar moving average combined with the psychological level, combined with the R2, are brilliant areas of resistance to have a stop just above this area if you wish to enter this trade earlier than waiting for a signal or for the price bars to turn red. This is a trade that I did yesterday afternoon, and then prices just moved down, and look where they stop. You see the profit taking from the shorts as they buy back into the market. prices come back above the 5 bar moving average, and then again significance here, they close back below. So the momentum, even though there's profit taking, the momentum is still to the downside, and then we see the market trade back down to the high of Friday, the R1 and the psychological level there as well. And then prices start to move high. We get a bit of a retracement here, and then prices make their way back to the upside. And again, you can see from this high to this low, price is stopping at 89%. I would think is about the same, 78 to 89. And there you go, 78 to 89 before the DAX then goes into the quiet mode. So that's the run through of reading the market for yesterday, and overnight we can see that prices are showing a bit of weakness, and what I'm looking for when I'm doing this is looking at the DP level and the 200 bar moving average. If prices are above this and above the 5 is above the 20 bar moving average, you've got that momentum. We get a close back, but then we see them buy back in, and then the market moved higher, gaps there. Then we switch, and notice here how the 200 bar moving average and the DP level, there's always a battle around these levels, and eventually it breaks. And at the moment we are currently trading below the DP and the 200 MA, so the short side's got the best side at the moment. The 20 bar is actually higher than the 5 bar moving average as well, and we've just driven through the BRN there as well. So back to the daily chart, get an idea. You can see that we are starting to move to the downside. Does it mean to say it's going to open and move lower? It doesn't. We don't know. That's the first thing in trading. We don't know what's going to happen. We have to develop an edge to see and interpret what's going on. They could turn the market around, move it higher first, trade it back up to one of these areas. They could bring it back to the DP level and the 200 bar moving average, and then switch to the downside. They could send the market lower, and if they do, I'll be looking for the selling to disappear. I'll be looking for these green bars where we see them buying back in a down move, or the shorts taking profits, and then look to wait for a buy signal or anticipate with the price action. Okay, so that's a run through of how I view the markets again, and it's only the feedback from the market. It isn't an opinion of what's happening. It's taking what is actually being drawn at the time. Now I can see they're selling. Are they going to take profits at this level because over here the market moved higher last time? It's all of these sort of things. It's the feedback loop, as I call it, of interpreting what's being presented there. But at the moment the market is short because you've got the 5 below the 20, the 20 below the 200, and we're below the DP at the moment. Okay, that takes care of that. Now yesterday afternoon, I'm just going to go back as well, we had positive news on the ISM figures. It's the only high impact news item this week. We haven't got any today at this level, and as it says here, stocks stumble as investors realise ISM good news is bad news for liquidity lifelines. Yeah, they don't want too much positive news like the non-farm payroll figures of last week, because it means that they can't just keep printing money and buying things. And the ISM came out very positive yesterday. I'll just drag that back, and you'll see there. Oh, actually, that's. Let me just bring that up to speed. So it came out at 57. It was forecast at 50, previous 45. Like I say, most of these figures are BS at the moment. They're doing themselves an injustice actually by fudging the figures, because it's, as I say, it's stopping the liquidity lines for them down the line if they need it when we get a second wave of the virus. So yeah, you can see what happened there yesterday, but it didn't help because as you see here, immediately this was sold into back below the 200 bar moving average and then south. Okay, I think I've waffled on enough in this one this morning. There is no news, as we've seen, so the market's going to have to make its own mind up. And no doubts they'll favour the buy side if they can, for the obvious reasons of the last 12 years where they want the markets back on the highs. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.